Hello, everyone. I hope that you had a wonderful trading week so far, and we're back again, right? So far this month we've had a rather large range month with the Dow leading. You don't see that a lot, right? So just by looking at my screen, you guys can see the monthly time frame, right? And this is something, you know, or I would say swing trading concept, which can help you, and it's pretty simple, right? And that's due to the fact that even though, right, the index futures market does not follow the traditional, you know, what do I call it, cycle, yearly cycle, it does, respect the true open of the year, right? And just by looking at the monthly time frame, right, we can see that this candle traded above this one traded below this one, right? And if you look closely, you can see that this one closed below this one here. This one closed above this one here and traded above this one. So, on the lower time frame, of course, this is SMT, as you would expect. And if I go down to the lower time frame, you can see that, right? We have SMT right here. And of course, the NASDAQ is very choppy, right? Very choppy. Please take note of everything that I say, right? I'm trying to deliver the content in a way that, if you know, you know. But yes, please take note of everything that I say, right? There won't be, you won't see me like writing notes right now until we get to the other, to the forum, which we will get there shortly. I'm just, testing everything out, making sure that everything's fine, before we go to WAP, right? So anyways, here you can see that we had SMT, right? We had SMT here and SMT here as well. What did we expect this month? Right. First of all, we were always expecting some downside whenever the market actually, turns around. That first large swing, that first really, really large swing of this quarter, right? And this is what we got, which came after SMT. So currently looking at price, you see that here we had consolidation, right? And here we had the same thing, but due to the fact that there was SMT here, right, we would expect that price would be, weaken, and then just due to the fact that it's Q2, this is what we would expect. But it's not only, what's here, right? There is something that is outside of the realm of quarterly theory, right? Which you can implement to your chart state notes, right? And this is the, the seasonality, or the, seasonality switch, right? Whereas you would, focus on the open of April, on that specific month, right? Is there SMT between March and April? It doesn't have to close, above it a lot, like, or open above it a lot, the previous close, right? But it just has to open above it where another one of the triad should open below it. You see, this is time specific, and this is a higher time frame. This is the monthly chart, right? We already had, SMT on the monthly cycle already. We had lower time frame cycle SMT, which is why we, expected, downside. That was what even if price had, went higher and run a high, we would expect lower prices, right? That's what we would expect, and that's what we still continue to expect. So here, right, I will turn this on. Right, you guys can see that here on this candle, right, this candle, we traded above these highs right here. But on this candle here, right, we did not manage to get above this high, nor did we close above this candle right here. Do you see? These are the three candles, which caused price to, fall, to go lower. And this is a daily, not a daily, my bad. This is a monthly, not a, what am I saying? This is a weekly chart, right? Sorry about that. I was confusing myself with the monthly chart because I have other screens open and then it's just so confusing. But anyway, this is a weekly chart, right? And this three candlestick pattern usually, puts seasonal tendencies or whatever you want to call it, into action. Pay attention to the closers, right? And also, we're getting into the second quarter of the year, Q2, which is where we expect volatility, large range price swings, right? We expect downside, right? It's not about market structure shifts. It's not about any of that, right? This is what it's about, right? SMT. Also, if you guys realize, which I doubt that you do, right? This candle right here, or these candles right here, like look at the S&P 500. Look at the NASDAQ and pay attention. I'm literally just using 3 swing points, and this is specific for this specific time, which is April, from crossing over from, the last quarter. It's a precision swing point. Did you notice that this was a precision swing point? I don't think you did. And then here, the candle after the precision swing point, right, you have one close above the previous close, open above the previous close. Let me look at the S&P 500, right, specifically, right? So in the S&P 500, and this is us, digging into this weekly chart right here, right? So here, we had price trade above this high. Then also, we had price open above this close right here. You see, whenever you have another asset class on the weekly chart, whenever we're changing seasons. So to make it easier to understand, say we're going from the winter months to the spring months, or we're going from Q1 to Q2. We're switching over, right? Whenever you see this happen, right, and then in another asset class, right, you have this happening right here, and now we're going to look at the NASDAQ, right? You have price failing to trade above this high, right? And this candle right here, this specific time, which is the first week of April, you have price fail to close above or fail to open above this close right here, and fail to also trade above this high, right? That is a cracking correlation, right? That is, and remember that this candle in the middle of, both of them must be a precision swing point, right? So this is a precision swing point right here in NASDAQ. And as we, continue, as we, go into next month, then this will become more clear. It will be explained more clear. But for now, it has to be like this, right? I realize that whenever I, make everything, too, what I said, too, easy, it's like taken advantage of. Or whenever I try to explain something, or I explain it very well, everyone thinks they get it fully, which no, you don't. You haven't. There are people here that, I don't even understand why you're even here. But yeah, we will, switch over to WAP very soon. Like I'm currently just trying to make the platform or our forum, suitable for what we're doing here. So we need to have, separate, chat rooms, a forum, and things like that, right? And that will prevent our stuff from being cloned, right? So they won't be able to clone it anymore. And then, yeah, so that's pretty much what it is. But this right here is what you would call, a advanced swing point, right? A precision swing point, right? And even though, right, as you guys realize, the only reason why it's, necessary, the only reason why it's important because it's a precision swing point. And we must note that there is liquidity above this right here, right? This is not random that this happened. And then we had, on the weekly time frame, price trade above it, then just crashed, right? So price opened here, right, above the previous close, right, of the previous quarter. This was Q4, right? This was the previous quarter, and this is the current quarter. No, this was Q1. This is the current quarter, Q2. Traded above it and collapsed. Here, right, this is the precision swing point. Price failed to, right, trade above this high, and price trade to open above this open right here. So for this candle, the precision swing point, which is in the S&P 500, this would be a close. But due to the fact that it's a precision swing point here, which is the opposite of this candle, this is a open, right? So this is a close. That's important. And this open is important, right? So that signified that if this failed to trade above this high, that would equate to SMT, right? That would equate to an SMT swing point, right? So this candle right here, this became, very important, right? This was, put into place by, all of the stages that had to be touched upon, right? Here in the Dow, we have, this open below this close, right? So everything right here around the top on the weekly time frame is doing something different, right? There is no symmetry with any of these right here. This one traded above this high, right? Just as how the S&P 500 traded above this high, but guess what? It did not open above this close. So even between these candles right here, there's a cracking correlation. These are things that you will learn to look at, you will learn to pay attention to as we go along. right? So yes, and of course, I don't think that this is it, right? If you guys, you know, pretty sure that you guys realize, right? For the Dow, you can see that we have a lot of, you know, unbalanced liquidity here, right? The Nasdaq, we can expect lower prices, right? And then we have all this, war stuff going on, economy is not, stable, and so on. Then, we'll look at Bitcoin too. We have this crazy um sequential SMT between the quadrennial cycle, which is why we had price pullback like that, which I have noted before. I don't remember which video, but I have noted that before price began to fall. I can't, go back and, look for everything that I've said because I've said so much, and I used to do that, every time we get something right, I just crop it up, but it's just too much now. You just have to pay attention, right? Or you can probably go back and look for yourself, right? So I like explaining for now without any annotations, right? I am, hoping that you go through and mark up your charts, right? It's better for you to see me talk about, talk about a raw chart with not a lot of annotations, right? First of all, this will push away those who actually don't want to learn this, right? And it will seem boring, right? Because not, I'm not highlighting a fancy order block. It's just highs and lows that I'm talking about, and imbalances, and I'm pointing to them, right? You have to go in your charts. If you want to mark them, you can, but you don't have to. It's not necessary, right? So we could see, tremendous downside, in regards of these, right? So right here, right, all of this is an imbalance right here, right? This is all imbalances. Remember, wicks are gaps. So if I would do this and turn the wicks off, what would you see here? Just imbalances, right? And this right here doesn't really bother me. Like, I don't care about this. To be honest, remember, I don't care about order blocks like that, right? It's SMT. So the only thing that would, have me thinking that we would be, going, to at least retrace before falling more would be seeing sequential SMT, right? That's the only thing. There's nothing else that, matters to me. There's nothing else that, well, there are other things I would, be lying if I said that there's nothing else. There are other things that you will eventually learn about, but, for the things that we're using that we have talked about, there's nothing else that would allow me to, see a reversal. Is that a market structure shift? I don't care about market structure shifts. It's, whenever there's SMT, we get in, and when there's SMT in the opposite direction of the SMT that allowed us to find our footing in order flow, the SMT which has put price in its current direction, so if the SMT here now, we get a retracement to, cover this gap, if, which is, I don't know, I would say unlikely, but it's like right now, it just isn't the best price action to trade. Let me just say that. So we would literally want to see some form of consolidation, right? Then price would trade above that into a higher time frame gap. There's sequential SMT, right, at the right day, at the right time. Then we trade. But currently, unless you got in about, around here, or, here, and your stop is above here, then it makes no sense to do anything right now, right? But we have a lot of gaps below price action, and looking at the Dow, you know, doesn't look good. But yeah, that's it. Now, right, we're gonna be going to something else that, is the real gem today. The thing that you want to take note of, the thing that you want to study, the thing that, this is better, in my opinion, than the OG FX triad, right? So this is not an FX triad, this is an intermarket triad, right? And there are many, right? But this one is, sorry about that, one of my favorites, right? I've been trying to give hints over the past, weeks, but yeah, I don't think anyone got it. So yeah, here we go. So, basically this would function as a third asset, which should be in correlation. And when I say it should be in correlation, right, you know what I mean? I mean, whenever the T-bond futures is running a high, the euro and the pound should be doing the same thing, right? Whenever we have a crack in correlation, such as here, where we had price failed to trade above this high, and then here, where price traded above this high, and here, price traded above this high, right? Whenever we have that, right, and I don't even want these right here on the charts, let me take them off. Whenever we have this, right, this is stronger than if you had, SMT between DXY, EU, and the pound, due to the fact that the bond market, or which is a part of the interest rate triad, controls everything, right? Not the dollar that controls it. It controls everything, actually, right? This is specific to the weekly cycle, right? And the yearly cycle, right? So this is specific to the weekly cycle and the yearly cycle, right? Looking at this, right, for example, here, right, you see the bond market make a lower high here, then here, and we spoke about this before. We talked about this move. We talked about price trading above this high, coming down. This was the reason, right? So this right here is basically, what a real indicator would be. And these are the assets, which you compare it to. So this right here it's not like you want to trade this, right? This is just to help you to gauge the markets, and then it helps you, in a rather, stress-free way. That's what I would say. That's what I would call it. Why? Because you're literally getting, information from the interest rate triad, right? By just replacing the dollar index. So you just have 3 charts on your screen. And if you're doing this, right? If you're doing this and you need to do this, some people are going to be like, oh, I don't want to trade futures again because, like, no, this is so good, right? And that's your choice, really. But there are better ways, for us to gauge the future markets as well, which we will, eventually talk about. And commodities, some people are probably like, they does not talk about commodities. Not yet, but eventually, of course, we will. So yeah, here, right, we had sequential SMT. And we had SMT here too, right? But this, you don't need it, right? And it would help, and it is important, but you don't need it. That's just what it is, what I'm telling you, right? To gauge the high, the low of the week, right? What I have found to be one of the easiest ways, right? One off, right? This is literally just a way to, give someone that is new, right? This is a way to get people, who have a hard understanding of price to begin to actually understand, right? It's specific, you know, time frames and specific, let me show you here, cycles, right? So this is Q1. See, Q2 failed to break above this high. Here, price broke above this high, but it fell. Here, price broke above this high, but it fell. The higher the intermarket sequential SMT, the larger the range will be. That rhymes. That was good. I don't try to rhyme, by the way. But yes, right? This is it. And even here, I can literally, let me zoom out, show you guys, right? We're going to look at the, right? We're going to look at the yearly cycle. What happened in the yearly cycle? So I'm going to take off this monthly quarters, show you guys that as well. Do you guys remember when we were so bearish on GU right here, right? And here. And then we were literally aiming for these lows. And I don't know, some people probably, if you haven't been paying attention, you probably don't know. Because I am not, going to be, unless it's like a crazy move, something, something like that. I'm not going to be like repeating or like beating my chest every time I get something right. You should know by now that that's normal. It's, we don't need to beat our chest every time we get something correct. Right? It's just what it is. And it won't stop happening, right? It'll always happen. It's not, hard to understand. We have to be mature to a point where we don't really care about the outcome, right? So we don't need to celebrate anything, right? If you guys remember, right, we talked about the different, how do I say? Should I talk about that now? The different, fractals that's within a quarter. But I'll leave that for now. Let's talk about this high right here. This was the high, right? And I'm referring to the bond market, right? This high right here was the high of the previous quarter of last year. Right here, you can see that price tried to go above it during the previous quarter of, of where we are now. So Q1 of this year, price tried to go above Q4 of last year. That would be sequential SMT if, we had price run above here and this failed to do so, but, they both failed to do so, right? And I'll turn this on because you guys always ask me to, right? So here, right, we didn't have price trade above here, right? Not in the euro, not in the pound. Is that correct? Yes, it is. At these lows right here, what do you see happening? Can you see that? Right? So first of all, we had sequential SMT between the euro and the pound here, right? And then what kicked off price action to run up like this? It was the second stage or the second sequential SMT, which followed this one, right? So here, look, understand. We had price break below this low. That was sequential SMT. Monthly sequential SMT, if you remember, and we talked about this too, if you remember, right? We had the pound fail to break below this low, then we had price just begin to consolidate right here. It looked messy, right? But then here, what did we have? Intermarket sequential SMT. So we had the bond market taking this low here on, wow, this was my birthday, February 22nd, right here. And here on February 22nd, what do we have? Right? We had sequential SMT, so we had a higher low being formed, right? While price took this low right here. Here, we had the same thing, right? So whenever you have, you're using this, you're going to be using this, and then you'll begin to see things like this outline themselves in price action, right? So first you have, regular, well, this was actually intermarket sequential SMT as well, right? This was actually intermarket sequential SMT as well. But, right, you have SMT between, two closely correlated assets within the same asset class. For example, euro and the pound. Price trades up, then there is sequential SMT expansion, right? Literally midway into this consolidation, which people see as an equilibrium. You understand now, like, how important this is. And then what happens? Expansion. Also, right here, this high is important. Well, both of these highs are important, but let me just write this. This one is important, right? And I will highlight the highs which correspond with time, right, in respect to these assets. So this high is important right here. I will just use this one, right, because it's right next to this and it's a wick, right, which is above it, which price I already traded through. And then we had this one here, right? So as you guys can see, right, while we had price break above here, we had price here, but it was not close to this high, and this high was within the current quarter. This indicated weakness. All right, this indicated weakness, which is why when price was trading here, we highlighted this high. And now we'll highlight this high right here in the corresponding highs in the other asset classes. I'll just do it another color, a different color. I'll use red. And the thing is, all of this is, right, it's to get you, your understanding up to standard so you can get what's coming next, right? So I hope that this is not hard for you to understand, because if it is, then I don't know what you'll do next time, right? But you should understand this, right? You should understand this. This is a way of gauging premium and discount, right? Here you can see that the pound, right, it traded above both of these highs. But euro, it just traded above this one, right? Also, this was the high of the previous quarter of the previous year. This was Q4, right? This was Q1 of this year. And in Q1 of this year, what did you have? You had this, price point, which is this price point in the euro and this price point in the pound, causing sequential SMT, right? So here, we had this, right? We had, this price point, couldn't even go above this one, much less this one. Sequential SMT. Then here again, right? And we talked about all of this before it happened, by the way. So it's not, remember, I don't like talking about things that I didn't quote unquote predict, because it's like, I don't like talking about hindsight stuff. Like, whole time while this was happening, we were there, right? Literally. Even here, and here, and here, right? And then here we had the euro, not the euro, the pound making a higher high during this quarter. So price traded above this high. Remember, the closure is important. Duty, closure, closed, drop, accumulation, manipulation, and distribution. Right? You can see that. That's pretty easy to see, right? So this is how you would use it. And we already talked about how to use it on the lower time frame cycles, well, so far, just the monthly cycle, which you should use the forward time frame for, right? That's where you look for closures to confirm your sequential SMT, right? So this right here, if you trade Forex and you have the T1 futures, euro, and the pound, right? You don't need anything outside of the charts, right? You're good with this alone. And remember, a lower time frame SMT confirms a higher time frame SMT. So due to the fact that we had sequential SMT here, what else do we have? What else do we have? We had SMT between this high and this high, right? This high and this high right here. Let me show you. So here, here's a lower high. And then here, we had a higher high. This is why the market literally moves. Like you already know. This is all we talk about, right? So this right here, this is what you should, take from this lesson, right? This is me trying to make it more easy for you to understand. And when we go onto the forum, and I already know that some of you guys are going to be, killing it with this already, you can get, I don't know if you care about pips, a lot. Your stop loss, small, right? And we will definitely, be using this in the future, talking about live price action and such. And if you guys realize at these lows, what do you realize? We don't have any SMT right now. What does that mean? We have to wait for it, right? The move that took place here, price fell, right? Then we had, retracement, and price continued to fall, right? After we had our sequential SMT here, price continued to fall. If you realize it's just sequential SMT, right? Sequential SMT, sequential SMT, right? And the lower time frame sequential SMTs are in line with the higher time frame sequential SMT. Do you see, what we're looking at right now? Do you see the importance of this? Do you see that it actually works? Do you see like how much people like passing their challenges, whatever? There are people that send me, their accounts and, doing very well, but they don't really want to draw attention to themselves. Like, it's amazing to see. No one else talks about stuff like this. It has everything to do with quarterly theory. And it works. we will be, going beyond this. As you guys have realized, like we, it's like we don't really have to talk about true opens anymore. We just expect, it to be there, which it usually is. I hope that you found this insightful. I've been yapping for a while. I hope that you found this one insightful. And yeah, I'm working on the forum, right? Really want to like drops, some other stuff, but like whenever we are, safe. But this is good. This is amazing in itself, right? And it takes a lot of stress off of, the person that does not want to have too much things on their screen at the same time, right? Try to use it this week, and you'll see the difference that, you know, it makes. So just have a nice day. I am so tired, literally. I don't know why I'm saying that. You don't care. Anyways, have a nice night, everyone. Have a, productive week or rest of the week. And yeah, we will be back this Sunday at least, right? That's scheduled live stream. Until then, I'm trying to get the forum in order. It will be, great and better. And we have Netflix grade security that we're actually working on. It's just that due to the fact that they are like a big company, they have a schedule that they need to work on. But we have, we're getting back great feedback, and they are working on it actively, actually. So yeah, that's what it is. So yeah, have a good night. I'm going to be posting this before, I'd say, the next 2 hours or so. So if you need to rewatch it and walk, then it'll be there. But yeah, have a wonderful night, everyone. And again, yeah, that's it. Bye.